Hello everyone, welcome to QuintEdge. This is CA FRM Yash Jan, and in this video we are going to discuss everything that you need to know about financial modeling. First of all, before we start with the video, let me give you a disclaimer. I don't have that capacity to make you master of financial modeling in 3 hours, 6 hours and maybe in couple of weeks also. It's a process or it's a skill that is developed over the years. And within 2, 3, 4 months, you will know the basics, but until unless you practice it on real job, you'll not be able to master it. Okay? So let us move ahead and firstly let us discuss the structure of the video. So firstly, we'll discuss what is financial modeling. Before diving into details, we should at least understand what is it. Then we'll discuss, is learning financial modeling worth it? Are you better off investing your time in learning some other skill? Because the only thing that all of us lack is time. So is investment into learning financial modeling even worth it? Let's discuss that. Then the background knowledge required to learn financial modeling. Just like every other subject, you need certain background knowledge. Obviously, like at QuintEdge, we help candidates to develop it. But in case you already have this knowledge, you can directly start learning the financial modeling. Then purpose of financial modeling. Why do we prepare financial model? Like what is the use of it? Then types of financial model. What kind of decisions we take using financial model. For that kind of decision, different financial models are there. We'll learn about them. And then a structured way of learning financial modeling. In case you join financial modeling course at QuintEdge or maybe at other institute or maybe you're learning it by yourself, this is broadly the pathway that institute including QuintEdge or you should follow to learn financial modeling by yourself. So let us get started. Firstly, what is financial modeling? Without making it very complicated, it's not Excel, it's not accounting, it's not finance, it's mixture of all of them. It is a tool to make decision in which we use Excel, accounting, stats, economics, all these things. Okay. Now, at a very superficial level, most of the financial statements will be projecting P&L, balance sheet, cash flow, profit and loss account, balance sheet and cash flow. And if in case you project these P&L, balance sheet, cash flow, you can say I have prepared a financial model. So at a very superficial level, all of us can understand financial modeling is preparing P&L, balance sheet, cash flow of future. Okay. As we move along with the video, we'll understand about the integrities. But at superficial level, this is a good enough definition. A tool using which we are going to project P&L, balance sheet, cash flow of the future. Now, is learning financial modeling worth it? Answer is yes, but with a star. In case you want to go job into core finance, then it helps. Financial modeling helps, really helps. But in case you don't want job into core finance, if you are a CA and you want to work in auditing or taxation, no need to learn financial modeling. Okay. In case you have qualification like CFA, CA, MBA in finance, and you want to work in these industries like investment banking and within investment banking also IBD vision, that is valuations and financial modeling, the deal side of things. Then you have to learn financial modeling, equity research, obviously you have to learn, financial consultancy, and in case you want to start your own firm down the line, 2, 3, 4 years down the line, learning financial modeling will really help. It helps you to get clients easily. So these are the candidates. In case you have these qualifications and want to make career into finance, go and learn financial modeling. It will help a lot. Sir, what if I don't have these qualifications? Then also my first recommendation is try to aim for such qualifications. Like get at least any of them. Maybe from tier 2 college also MBA finance would work. But you need certain qualifications to ace in your career over the years. Otherwise, what will happen? 3, 4, 5, 6, 7 years down the line, you will be stuck at a particular designation. So my suggestion will be to aim for these qualifications, but it's a long-term thing, right? CFA 2 years, CA at least 5 years, MBA finance again 2, 3 years including preparation. You can't solve the problem that you are facing working in core finance immediately. So in that case, I'll suggest aim for these degrees in long term and in short term, pursue financial modeling and you'll be able to start with a basic finance job. Okay. So in case you don't have these qualifications, it's perfectly fine. Aim for these degrees. It's a 2, 3, 4, 5 years matter. But in 2, 3, 4 months, you can learn basics of financial modeling, get a job into core finance and then slowly and slowly over the years progress in your career. So is learning financial modeling worth it? Yes, in case you want to make career into core finance, but in case you don't want to make career into core finance, it's perfectly fine. Now let us discuss background knowledge required for financial modeling. First of all, the entire industry of financial modeling and valuation works on MS Excel. So you need proficiency in MS Excel. Not the base level knowledge, but slightly advanced knowledge. You should be very good with all the Excel formulas. You need not to learn VBAs and all, but a very good knowledge of MS Excel and its function is required. Number two, a very strong understanding of accounting and finance. You don't need accounting to the extent of CPAs or chartered accountants or ACCAs, but finance you should have very depth knowledge. So accounting and finance, strong understanding. Then statistics, a base level knowledge is required. At the end of every financial model, we do stress testing, sensitivity analysis. To project forward, sometimes we use regression, time series or cross-sectional. So a base level knowledge of statistics is good. Then a base level of economics is also helpful, because in financial models, we forecast the future. For example, we are on the top of interest rate cycle. Now, if I want to forecast next 2 to 3 years, I can say the interest rate will remain on similar level or it will go down slowly and slowly over the years. But I don't expect it to increase beyond this particular point, right? FOMC minutes just came out when I'm recording this video 2-3 days before it. So they also had similar kind of commentary. So if in case I understand basics of economics, demand, supply, business cycle, impact of monetary and fiscal policies on the growth rate of the country, all these things, that really helps me to make better forecast. Then in the end, industry specific knowledge. It is not required immediately, but once you start working in a particular industry, 2, 3, 4 years down the line, you would want to master a couple of industries. It could be industry like BFSI or maybe technology, telecom, media. Any industry you would want to, you have deep passion to follow, you would want to master that industry knowledge, right? So these are the things that you should be very good at to learn financial modeling. Now, moving ahead, the purpose of financial models. So my basic rule in life is, whenever there is confusion, go back to basics. So financial modeling on superficial level sounds very complicated, something that's very difficult to master. But believe me, it's just a tool to make decision. The purpose is not to make very complex financial model. The purpose is to take decision. The purpose is not to put very complex Excel formulas. The purpose is not to put n number of variables to forecast. Like when we learn machine learning in CFA or FRM, what I say, keep model as parsimonious as possible. If in case 4 variables can project the future with very high R square or adjusted R square, you don't need the 5th variable, right? Do testing on 4 variable model only. Similarly, over here also, we would want to keep financial model as easy as possible, as simple as possible, right? And what kind of decisions we take by preparing financial model? It could be business valuation. Currently, TCS is trading at 4,000. I can value it and say its value is 3,500. So it is overvalued. Something worth 3,500 is trading for 4,000. So I can short that asset. Or if it is coming as say 5,000, it's currently trading at 4,000. So I can advise my client or put my own money into TCS, right? So business valuation, investment analysis. So basic multiple investments you have done. You can analyze the yields, how much returns you are getting, etc. Then budgeting and forecasting, how next 2 to 3 years of revenue would look like, cost would look like, profitability would look like. Then project finance, in case we are going to start some new project, before making any decision, before putting any money on the ground, we can analyze it by forecasting revenues it is going to generate, cost we have to incur, from where we are going to bring in money, what's the cost of money, all these things. Then mergers and acquisition, company A acquiring company B, what will be the impact on shares outstanding, earning per share, share price, how would combined companies revenue look like, cost look like, all these things are dealt over here. Risk assessment, value at risk, expected shortfall, that we very briefly discuss in CFA and very in detail we discuss in FRM. Value at risk calculation, how much your portfolio value can fluctuate in a particular day with certain degree of confidence. Then real estate investment, in case we are going to buy a land, whether we should be financing it with 60% debt or 90% debt. if in case we are going to lease it out, how much we'll be getting in the form of rentals, what will be my rental yields, when I should be taking exit, from where we'll get money to pay off the loans. Then financial planning for startup as well as for mature company. Then loan amortization. So like a company plans to raise money from 10 different sources, from where it will raise how much amount of money, at what rate of interest they should be raising money, how they are going to arrange for money to pay back the loans. All these things are discussed over here. Then capital budgeting. There are 10 different options available, whether we should start project A, B, C, D, E, which project to start. The project with highest NPV. Capital budgeting models. Then financial stress testing. In stress testing, you take one variable and take it to the extreme. Like let's say for a company, one major raw material is cotton. If cotton price increases and doubles in next 6 months and stays there for next 1 year, what will the impact on my profit margins? Will I be suffering losses? Will I be able to meet all the expenditure? What will be my interest coverage ratio? What will be my DSCR? How the cash flows will get impacted? Do I need to take more loan to deal with such situations? All these things are dealt over here. Then product planning. You already have, let's say, 5 products. You're planning to launch 6 products. It's going to be a very big launch. So how it will impact your overall revenue? Is it going to cannibalize? That is, will it eat away the existing sales? New product taking over sales of previous product? If yes, what's the cannibalization rate? All these things are discussed over here. Okay. So these are the purpose of preparing financial model, and it's not exhaustive list. There could be other reasons as well to prepare financial models. Now, the types of financial models, which kind of financial models are prepared. So these are the common ones, and you don't even need to give name to every kind of financial model, right? These are the ones that are used frequently in the industry. First one, a 3-statement financial model in which you are forecasting P&L, balance sheet, cash flow. Then this is valuation model, discounted cash flow, DCF. You forecast the free cash flows, you discount them using cost of capital, and then you arrive at the value of the company. Accretion and dilution M&A model, what will be the impact on EPS, earning per share, when company A acquires company B, or company AB come together and form company C. Then comparable company analysis, also known as trading comps, and precedent transaction analysis, also known as transaction comps. So let's say I want to value TCS. One way is to compare it with Infosys. Let's say Infosys is having earning of 5 rupees and it is trading in market at 20 rupees. So its PE ratio is how much? 4. Now my earning is 10 rupees. So my value should be 40 rupees in market. So this is comparable company analysis. Precedent transaction analysis. Let's say some company that is very similar to TCS, let's say Mindtree, was bought 2 years ago at say 3 times of its earning. Now my earning is 10 rupees, so I should be bought at 30 rupees approximately. So this is precedent transaction analysis. In this, you are referencing current market price, and in this, you are referencing the historical deal values. Then leverage buyout transaction. So firstly, you find a company that is very stable in generating cash flows. Then you take lots of loan to buy that company. You take majority of the stake in that company. Now, whatever cash flow that company is going to generate, you will be using that cash flow to pay off your loan, because you are now the owner. You have taken a stake into the company. So you can utilize those cash flows to pay off the loan. So what happens? You have to put in your money very less, and rest of the money is given by the debt providers, and this increases the internal rate of return for equity provider. Then option pricing. So binomial model and Black-Scholes model, and then credit rating models. Credit rating models. So these are proprietary models. So like Moody's, S&P, Fitch, ICRA, CRISIL, all these rating agencies give ratings to the company, right? Debt of the company, A, B, C rated, D rated, default. So all these type of financial models are used frequently in the industry. So this is the types of financial model. Now let us move ahead and let us discuss the structured approach to learn financial modeling. So this is, you can say, broadly the course that we offer at QuintEdge related to financial modeling. Let us discuss, and all the training providers mostly more or less have similar approach. Or in case you're planning to learn financial modeling by yourself, this is the approach that you should be following. The first one is basics. So learn MS Excel, be good at it, basics of accounting, basics of economics and stats, basics of finance, All these are subject matter knowledge. Then you learn about modeling principles. Like accounts have their accounting standards, tax have their tax codes. Financial modeling also as a subject have their own principles. The best ways you should follow to prepare financial models are financial modeling principles. Learn about them. Then you move ahead and try to prepare your first 3-statement financial model in which you are just forecasting P&L, balance sheet, cash flow. Then moving ahead, you can increase the difficulty level and prepare advanced 3-statement financial model in which you are forecasting P&L, balance sheet, cash flow and working capital schedule, debt schedule, fixed asset schedule and other schedules related to a particular company. Now you move towards advanced finance. You have learned about basics of finance. Now learn advanced finance like bifurcation of cost of capital, various ways to calculate free cash flow to equity. Learn about all these things. And then you start preparing the basic financial feasibility model. Basically, a project is to be started and someone have came to you before you invest 500-600 crores of your own money or that person invest his own money. He would want to make sure he'll be able to make the desired return or this project actually makes sense. So before putting money on the ground, you put the numbers in Excel, do the number crunching and give him the decision whether this will make sense or not. Optimistic case, pessimistic case and like a moderate case. Then you move towards valuation. Discounted cash flow. Basically use cash flows generated by the company, maybe dividend or free cash flows, and then you discount them to the present value and calculate value of the company. Then trading comps and transaction comps. Basically, you're trying to value your company by comparing with the previous deals or the current competitors. Then these valuations you got of a company, you can put it on a chart along with other data like 52-week low, 52-week high, average price throughout the year. This will current market price. This is called as football field. Once you're done with this, you're done with valuations. Then you move towards LBO, leverage buyout. It's a complex financial model. Then you move towards merger model, M&A model. And then in the end, you can learn about industry specific models. So in case you're learning by yourself, follow all these paths till here and industry whichever interests you, learn about it, right? In case like I've given example banking, mining companies. These are the industries we can deal with, okay? So this is the structured way of learning financial modeling. So with this, we are towards the end of the video. I tried my best in the very small amount of time. I can give you the highest amount of exposure to financial modeling. In case you have still some queries, feel free to reach us in the comments or you can directly call our counselor and ask about financial modeling. So till next time, bye-bye.